Are you a digital course creator teaching something? Are you receiving money in exchange for these courses? And perhaps now the IRS is asking for a percentage of that? I know, this strange situation that all of us find ourselves in is taxes. And what I want to uncover is the scandal that's happening in regard to the current United States tax code and how we can change it. Now, to do that, to set the stage, we need to go back to where it all started, Al Gore. Now, as we all know, Al Gore invented the internet. Just kidding, the internet was invented in 1969 when the United States military started using a connected network of computers called ARPANET. This eventually grew into a network of computers at the Massachusetts Institute of Technology, where famously the first ever business transaction was made over the internet, a drug deal for weed between two students. The internet slowly grew in popularity until the 2000s when the dot-com boom famously took place. This gave birth to beloved tech monsters of today like Amazon, Google, and Facebook. And this is probably where you come in. As these monsters of the tech space took their seats at the table to make what we all now know as the modern internet, entrepreneurs like you and I realized we could ride the wave using these free services to advertise our products and services. Famed authors like Tim Ferriss coined terms like the new rich, explaining those who were location-free, time-free, and used the arbitrage of the internet in general to carve out a better living than was even possible just a few years prior. Now, the IRS and its tax code continued to do its own little thing at this time, however. And many of the common tax strategies that CPAs and tax preparers would utilize for their clients didn't fit the bill for these new location-free tech-enabled biz owners. Taxable income rates of 70% or higher is still common, especially if they were claiming residency in a less than business-friendly country. The worst part, companies like Facebook, Amazon, and Google were and are still essentially paying $0 in income tax. What's more, for many tech entrepreneurs, their largest expense is advertising dollars to one or all of those companies. So how are the tech giants getting away with it? Well, all big companies like Amazon, Google, Facebook, and Apple have a tax strategy that is core to their entire business model. This means that they know exactly what they will do to avoid taxes at every revenue and income level that they hit. This allows them to be ready to implement strategies like spending extra revenue above projections on research and development, or to lease new hardware or software, both of which are incredible tax write-offs. Not until recently have the full gamut of strategies been available to small, ground-level entrepreneurs. Thanks to new tax planning software like TaxDome, QuickBooks Pro Connect Tax, and others, complex tax analyses can be done beforehand for clients as if a team of CPAs are behind the scenes crunching the numbers. But why isn't this well known? Well, companies like Intuit, the owners of MailChimp, Mint, QuickBooks, and Credit Karma, are one of the biggest lobbyists when it comes to tax reform. They make a lot of money keeping the tax code and the way people file their taxes exactly the way it is. Last year, Intuit posted a net income of $2.1 billion US dollars, and they want that number to keep growing. Fortunately for you, it doesn't need to stay this way. Contact a tax professional and ask them about tax planning. These pros should be able to get you a complete tax plan regardless of what your income level is, and that it will keep your tax expenses as low as possible. If you're interested in learning about how to build your tax plan today, Breezy Tax is currently accepting 5 more clients in 2023. Tax planning is proactive and has to happen before the year ends so you can file with all your appropriate pieces in place. If you want to learn more, click the link in the description below.